Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's going on, guys? This is Brinks Trades here, coming to you live with another breakdown of the trades, the breakdown of the charts for this week. If you guys don't know me by now, I am the resident indices, futures, kind of analyst for the Trading Nut podcast, and I'm one of the best day traders in the world. So I come to you guys every week with a breakdown of basically the futures markets, and basically just guys give you an overview of what I think the market's going to do for the next upcoming week. So again, background about me: I've been trading for 10 years. If you guys don't know me by now, if you don't know my story, it'll be 10 years in March of 2015 that I've placed my first trade. So it's coming up on a decade, and it's been a really crazy journey, and it's only getting better from here. So before I go into breakdowns for this week, I'm gonna actually I want to show something. Move this around, make this a little smaller, and this is something that Tony Gold 410 posted. He actually shared this yesterday. I was supposed to do live yesterday, so you can actually comment ahead of time of the lives, I think. And I saw this when I logged in. He said, "Grand Rising, this is real. I made my first withdrawal and still have a real account. Now I can compound and change my family's life forever. Thank you for your time and also your analysis." So, I mean, this stuff is, this is basically a free game that I'm giving out every single week, right? And I'm not saying these are not signals, right? These are purely for educational purposes only. The reason that I do this is because there is such a lack of transparency in the trading space that there's just not a lot of people that week in and week out put their analysis out there, right? Whether you're right, whether you're wrong, consistently put their analysis out there. And so, I think by having more and more people actually show you that this is real, and some of the scams you see online, or some of the people that are fake traders or just trying to sell you a course, that's there's definitely those people out there, but there's a lot of people out there that are actually trading for real. And exactly. So Tony said it's education and not gambling. And yeah, I mean, it's one of those things. Like when I first started trading 10 years ago, there was virtually nobody that was making sustainable money, really big, not even really big income, but just something you could look at this and say, this is a job and not a quick hustle or a quick flex. And so it's been really cool to watch. It's been really, really cool to watch a lot of traders come up over the past 10 years and kind of give more to that validity that this is a real thing. You can really make real money. And this is just not something that's for a big hedge fund or institution, right? And that the average person or the regular person can come into this space and learn and really just treat this like an actual career. So with that being said, I want to do a few things today. So the first thing I want to do is I want to go through the charts, but then I also want to, if I have my thing hooked up. So if you guys know, if you follow me in the Tick-Ups chat, I recently started I wouldn't call it a trading challenge, but I would like to call it, I guess, more of just kind of showing what's possible in the trading space, and really It's basically I took a $10,000 account because I read somewhere recently that $10,000 is like the average amount of money that the average person has in their bank account, right? Like rainy days, savings account put away, right? $10,000. I don't know how true that is for all of you, but it's an article I read. So if I have time and everything is hooked up, I will show you basically how I'm progressing on that challenge. In 2 weeks, I've been able to get a 20% return on this $10,000. So I'm already up $2,000 in this account, right? So if you're trading, if you're investing your money in the normal S&P, you're going to get like 10% a year and a great year, right? 10 to 12%. I think the average is somewhere between 7 and 10 on an annual basis. So basically, in 2 weeks, I've basically been able to get what you would get 2 years just generally investing in the market, right? If you put it in a bank and just let your money sit there, then I mean, it's even less. I mean, I think you're at like 2% a year, 3% a year. So basically, this is like 7 years of having your money in a bank account, right? So, um, if we have time afterwards, I'm gonna show that. I think I just gotta make sure that it's hooked up to my TradeZilla, and if not, then I'll show the screenshots in the Telegram as well. But yeah, I mean, it's education, man. It's understanding the markets, understanding that they do the same things over and over again, and just finding out how to capitalize on those. So what I want to do now is just kind of go through the charts. So if you guys know me, you know that um, I start with dollar first because it gives me a great understanding of what's going on in the market. So again, if you go to the weekly time frame on dollar, what we said last week is that we wanted to see the market really run to this high and uh, take out, really start making our way back down to these lows. Now we didn't get as high as we wanted to see. Ideally, we would have saw the market really run back into this level here. And if I draw this, yeah. You can see we respected consequent encroachment at the top half of the wick, so we didn't even make our way back up here. The hardest thing to pick in trading is the top and the bottom of your targets, like your actual pullback target and your actual run to the target. So what I tell my students all the time is don't really aim. This is just an idea, right? The goal is that we want to be able to capitalize on something bearish going from, potentially this high to this low, right? So you're not always going to 100% get the exact pullback targets that you want to see in the market, but the overall idea here is that we want to see the market continue to go down. And that's exactly what it did. It actually hit our first target. So you can see as of Thursday the 8th, we traded back up into this range. The next week, we really kind of consolidated and then really kind of started running for lows. And we took out our target here, which was our first target was the consequent encroachment of this wick, which I think we had maybe hit even the last week. And then coming back down, looks like we're probably going to head for our actual target, which is the low. I mean, there's nothing here to really say that we won't take out this low. So, so ideally, again, we're still aiming for this target. But if we look a little bit, we start looking at like left targets for the next potential run, even though this was our last week target and we didn't quite hit it, I mean, that still will be there. I'm really looking lower at this level, this range right here, for the sell side that's going to rest underneath here. And I would like to see the market really run to this low next. So I think this is this week's target. $101.597 is going to be the target for dollar. So and the only reason I do this again is to kind of give me a basis of where I think the market's going to continue to go. So if you can see here, we're basically going to be looking at bearish. I'm going to be looking at these two targets, 101.841 and then 101.49. So ideally, I'd like to see the market do something like this for this next upcoming week. I'm going to be looking at two levels. Potentially for us to run into this imbalance here and then look for the market to fall over. Secondary area would probably be this high, like us running back up to this high here. So either going to be looking here or here to for opportunities to continue to short. So we'll see how that goes. Let's go ahead and move. Let me look at see if there's any questions. No. Okay, cool. So let's go ahead and look at NASDAQ. So when it came to NASDAQ, I was completely off this past week, and that's okay. It's okay for a couple of reasons. The first reason is that I didn't actually take any trades on NASDAQ through that challenge. I told you guys that I've been focusing more on the Euro futures. So I just wanted to prove the point that one, you can trade anything, and two, it doesn't really matter what you trade, you can still build an account up. So that's kind of the focus that I've had for the last couple of weeks. I probably will still have that focus at least through August. But ideally, what I wanted to see here is there was a couple things. So last week we came back into this imbalance here. And ideally, I wanted to see the market really continue to run lower and potentially run for the consequent encroachment of this wick. I thought that, we had gotten pretty much market structure, good market structure break when we took out this low, and everything else was just going to basically run here. One of the hardest things to kind of call out in the market is whether you are having a liquidity grab versus an actual break in market structure. And so here on the higher time frames, we look at the monthly time frame. I mean, we basically traded back down into this order block and then kept running higher. This is really setting us up for a potential really bullish move. I mean, based on where we're currently at in the market, we're looking at the monthly calendar. It's August 18th, right? So we're more than halfway done with this month. The chances that we're going to come back down here and form new lows is probably pretty slim. So we're probably not going to come back down there. Then matching this up with the weekly time frame, that the fact that we failed to really respect this old fair value gap here kind of lets me know that we're probably not going to come back down here at all, and we're probably going to keep running up. So the good liquidity grab, even gets me every once in a while, right? So let me go ahead and erase this. So looking at the daily time frame, there's a couple levels here that I think we might run to, depending on the week. Ideally, I'd like to start the week out by us being bearish in the week, really running back down to this level here. Best case scenario would be here, and then really running to take out very short-term target, but it's still going to be like 300 or 400 points, would be this low. And then really just looking at, I'm going to go ahead and erase some of this stuff because we don't need this anymore. Every once in a while, you have to kind of like reset the chessboard, right? And kind of make sure that everything's kind of the way you want to see it. So there's a few levels here that I'm looking at. So this first level here is going to be a level of buy side here. I think we're going to probably take this out. Best case scenario here, is this level here. I'd like to see us really dive deeper into this gap to start the week off. Maybe Tuesday, Wednesday, we're looking for the reversal for us to come back up here and take this high out. My students will also know that in addition to being target and buy side there's also this as well. So I'd like to see the market really dive back in here and continue to go higher, right? So secondary level that I'll be looking at for us to really run into on the daily is this overall volume imbalance here. We know there could be some liquidity in that range. And then this will be the third level, which I don't think we'll hit all these this week. We could, but I think this is probably over the next few weeks. So I'll say this is city target 3, volume imbalance, target 2, and then these highs right here, this primary high. So ideally, a best case scenario, I would like to see the market really run in this and go higher. We could see, it's just the market's really choppy right now. Or choppy. There's a lot of gaps, not choppy, but So we could see something as low as this, or even maybe here. I don't think we'll come back here, but I'm leaning towards worst case scenario us doing something like this as I clean my charts off for the millionth time. Okay, so price swing. Yeah. Worst case scenario, we come back down here on a pullback. The reason I don't think we'll come all the way back down here is because we kind of have a balanced price range with buyers and sellers kind of existing in the same level. So I don't think we'll come all the way back down here, but I would not still be like my bullish bias would not be thrown off if we did come back down here. After this, I'll look at the calendar to kind of see where we're at. But ideally, I'm going to say this for now, but would not be surprised ultimately if we did this. So ideally, I'm looking for somewhere in this range to be a buyer. Then one of these three levels to be a buyer to continue the market to go up. If we go to the weekly time frame, yeah, we're pretty bullish. So overall, like I said, I'm holding a bullish bias. I am going to say the disclaimer that I'm not going to be trading NASDAQ this week probably either. And it's not because I'm more confident. I just like the setups that I'm seeing on the Euro futures one better right now. Because we are still, there's a lot of things that I'm seeing that from both directions where I can still kind of call bullishness and bearishness. Ideally, I'm leaning towards this, but there's a world where I can see this continue to, just collapse. Maybe coming back down here this week. Not collapse all the way, but coming back down here. So ideally, this is what I want to see, right? And I want to see it start to hit some buy side targets. But I'm just giving the disclaimer that I personally won't be trading it. I'll be focused on the Euro futures. Let's see. So Euro dollar. I'm sorry. Let's go to S&P really quickly. Yeah, I mean, basically, Nat said nothing's impossible. 100%. Like, there's, yeah. I mean, there's nothing's impossible. I mean, and that's kind of the thing that you have to take into consideration with trading is that your bias can be wrong. And like 60, like I said, I win about 66% of my trades ish. I haven't looked at the most recent updates for the trades that I've been taking on the new account, but traditionally I win about 66 to 68% of my trades. And so I'm wrong a third of the time. And so my whole goal is just not to blow up my account on the 30% of trades that I take. So sell side liquidity coming these days. Yeah, I mean, if you have a bearish bias, I could see how you could have that on the market too. But I just don't think with how much time is left in the month, I don't think we're going to come back down there. Especially looking at where we're at with the monthly candle. I don't think we're going to come back down there. So that's why I'm leading bullishness, but I can see some bearishness on the smaller time frames. So let's go look at S&P real quickly. Probably the same thing, yeah. So again, ideally, we wanted to see the market really come back into this range and then continue to go down. We did not get that at all. So I'm going to get rid of this. And I think I probably mentioned something like last week. Correct me if I'm wrong, anybody, but if we didn't respect this gap or this high, then we were going to probably transition back into a bullish uptrend. I think I said that for at least one of these charts last week. So ideally, this is going to be kind of the same setup. Notice how the market really stopped just shy of taking out these highs last week. So this will be target one, relative equal highs, right? And ideally, same thing here, right? Like I'd love to see the market really dive into this and then continue to go back up and take this out. That's best case scenario. We could also see something very similar to like what I called out just a second ago, where we run a little bit deeper into this gap here. A lot of times when fair value gaps fail, the market will retest them. They will find a reason to come back down there and retest these levels. This is kind of like the truest idea or definition of like support and resistance, quote unquote. So I would not be surprised. I'm going to draw this. Oops. I'm going to draw this target here, because this is where I will start to look for buying opportunities. But I would not be surprised if we ran down to this second gap next week. So I would be kind of prepared for either situation. This is also why I don't like, this is the one reason why you don't go all in on any trade, right? Like I see tons of people like trying to go all in on trades, and it's like, this is not a good idea because you never 100% know whether the level that you're buying in at is the level that things are going to reverse at. You could hold a bullish bias for the week and you could be right, but it could be this level, it could be this level, right? So you should never really go all in, because you're just putting yourself in unnecessary situations. Now, if you catch the trend and you're stacking entries once you know that it's kind of taken out a level where it's probably not going to come back to your entry, okay, cool, that's a little different. But going all in, like before you really see the market really turn your way it's never a good idea. But people do it all the time. People get so caught up in trying to, make $1 million or be the next Q Banks or whoever you kind of like look up to, Lambo Raul or whoever these guys are, right? So they focus so much on that, and they blow their $1,000 accounts trying to make $20,000 and $1,000. So if that's word of advice, don't do that shit, please. Currencies, all right. Actually, Dow Jones. Same thing on Dow Jones. Again, this is pretty much looking like the same thing. Like we wanted to see this fair value gap respected to run lower. We did not get that. So it's looking like this whole move was just a big liquidity grab. Same thing here. This one's actually a little bit better because we came back down and retested this consequent encroachment of this gap. So definitely holding a bullish bias on this. Let's say something like this. I'm going to draw a couple levels that I would like to buy at. I would say this level and this level. I don't think go weekly. Yeah, we're not coming back down there. That's crazy. Yeah, we're not coming back down here. So we could see something as low, just like the other ones. Make this visible on the weekly. Oh no. We could see something as low as coming back down to this level at 40,100 or 40,083. But I think we're probably gonna do something like this. I would be looking to continue this bullish trend at the top of this fair value gap here, or at the consequent encroachment, which lines up with the top end of this secondary BISI here. So I think that's something that, like, I'm gonna draw this for here. But don't be surprised if it just kind of comes back down to like somewhere in this range of this fair value gap, whether it's the consequent encroachment of this top one or the top end of this secondary one. But I think that coming back to this range is a very feasible idea. Let's just start the week off and then really running for these highs. Let me get rid of this. There. So 41,117. It's kind of like a longer term target there. So again, pulling back to, let's say, somewhere around 40,391 and the 40,088 level, and then continue to run higher. for the week. Euro futures. Euro futures. Let's look at Euro futures. So this is a fun one. Last week I caught some trades on this. I think I caught it's one of these moves, and I was gonna hold it, but I didn't. I was traveling for work, so like I couldn't really check my phone as much. So I just decided not to. So Euro futures. Okay, last week's target we wanted to see really hit was this old high here. We actually took that out on Wednesday, and then we started to trade through it, but we've been respecting it as of now. Ideally, I'm going to move this target up. I want to see the market really run to this high. I also will make a note of consequent encroachment here to see if we're kind of respecting that. But ideally, I want to see the market run for that high. There's not a reason why we shouldn't. So X daily C. So ideally, I want to see the market really form a low and then continue to run higher for that. So let's hop down to the 4 hour and see if there's anything that we see. I like this gap here. I would definitely like the market to stay above CE of this wick. I definitely would like the market to stay above this. So something like that. Again, this is going to be that weekly target. 4 hour. So ideally, I want to see the market pull back to this level at 1.0235 and then really run to the higher. And obviously, this is Euro futures. So this will be the same thing for if you guys trade Euro USD, right? So same thing. Again, stay above this high. If we close below this consequent encroachment, it's going to let me know that maybe the idea is off, especially if we take out this low. But ideally, I think we're going to run higher. I also look at the news after this to see if there's any like news events that we should be aware of. Pound futures. This is the fun one. This is the one I actually took trades on both last week, but this is the fun one. So so this was the target that I had laid out, this fair value gap here. We stopped just shy of this. We had a huge daily imbalance candle on Friday, which retrospect, maybe I wish I kind of would have caught, but whatever. So ideally, there's a couple levels here that I think the market could run to. The first one is going to be sell side here. Right there. So would not be surprised if the market ran here for these highs. And then we have this huge unmitigated gap here on 4 hour, which is also the same one on the daily as well. So ideally, I want to see the market run for this. I think there's a strong possibility we could run for this high and then come down there. Ideally, I'd like to see the first part of the week come down here and then run through this high. And then if we get an extended run, I mean, I don't think we're done. I think my long-term target is here, but it really depends on how we react to this gap. Ideally, I'd like the market to really use this as an inverted fair value gap, meaning that market breaks through, kind of retest it, kind of like your classic break in resistance, and then kind of runs through that to that high. But once we get there, I will be flat. If I take a position earlier in the week, I'm going to be flat until we break through this gap, and then look for opportunities to kind of catch it once we break through. So yeah, so if I don't take a position, or if I take a position earlier in the week, and I still feel like I need to trade later on in that week. So that's what I'm looking for this. And then pound futures is actually the fun one because there's so much more room between if you look at euro, like there's not a lot of room between our opening of the candle for this week potentially and our target, but pound futures still has a lot more room to run. So there might even be an opportunity to hold some trades a little bit longer depending on the momentum we get this week. So also that's pretty much it for currencies and indices. I'm gonna look specifically at pound futures this week. It's when I'm gonna be trading the most. Someone asked me to look at Euro UAD, so I'm gonna look at that really quickly. I don't trade this at all, so I really don't have anything to expect. So I'm gonna do this really quickly. Okay, so we just ran this high here. Ran this high. We haven't really broken structure on the daily. Or the weekly. Ideally, I'd like to see this go lower, but I don't really have a. There's a couple things I can see happening. I could see us running down to maybe this imbalance here and then going higher again. I also could see a world where we do the opposite, right? So if we go to the 4-hour, we run a short-term high like this, or trade back into this imbalance here. I'll zoom in so you can see that. Like I could see a bullish scenario where we attack that and then go lower. There's a lot of equal lows here and lows there. So I think there's a world where we could run this and go lower, but I actually think this is probably the more likely setup. Granted, because we ran this, we just took out a long-term weekly high, right? So I think this is probably the more likely setup, at least trading till we hit this gap there. So that would be like my daily target or my weekly target. But I don't really have, I just need a little more confirmation from the market. Either way, I think we're going to come here, right? I think we're going to come back down here. It's just a question of whether we're coming up here to go down permanently or we're running down here to go up. And I think based on higher time frame structure, with us rejecting kind of sweeping a higher level time frame liquidity, I think this is what could happen. Right. And it might not perfectly play out like this, like where we run up to this high. So I'll be looking at like short-term levels of liquidity that we could run. So like maybe coming back up here, or even getting so high as coming back up into this range and then really running for this low. And once we get here, I would definitely be flat because we haven't really broken structure. There's been a hesitancy to really go back past this low. And we've also respected some levels here of like consequent encroachment of these wicks. Oops. So yeah, so like ideally, I'm thinking this is, this lines up with the weekly. Like we came up here, took out this high of buy side here on the weekly, and then failed and really just kind of breaking here. And this is kind of our target. So we should be looking to short till there, but just need a little more confirmation for that. And I would say this is kind of our fail-safe level. So if you see the market trading if you see the market trading above these highs, then um, then this is probably like a dead bearish. It's probably going to continue to run back up. So, but I think based on what's going on in the weekly, this is probably the proper play of what's going to happen. Ideally, best case scenarios, we're running back into this gap. Since we've already touched this gap one time, we might not even see it come back up this high again. So look on the hour and see what we see here. It could be like if I had to watch a few levels, like the first level I'll be watching is this gap right here, since this is unmitigated, and see if we can run back into this and see what happens once we hit here. But really, these would be the two, especially since this 4-hour gap has already kind of been mitigated with volume already, or mitigated with on a retest. So that's kind of where I would be looking, that 1-hour gap, to see what happens. And then if we do make a run, this somewhere in this range is where I would be looking to short to continue to run down. But I would still stick with that bearish bias for now. I got a couple minutes, so I can do some other charts if needed. If anybody has any ones, I already know what someone's going to say. Someone's going to jump in the box and say a particular chart. But if you guys have any charts that you want me to look at, I got like 2 or 3 minutes that I can do that, as well as answer any questions that people have. Okay, cool. I'm not really seeing anything, so I'll let you guys go. Have a good weekend. If you guys are interested in joining the Telegram, oh wait, yeah, I was gonna do my the AMP Futures account. Let me see if I can get it hooked up. You know what? It's not hooked up. I'm gonna drop a screenshot in the chat, so this is gonna be an easy way for me to plug my chat. If you guys are interested in being part of the Tickups chat, join here. I'm gonna edit this. Copy the link here. And then I'm going to join, drop this chat over here. It's not working. Huh. there we go. Boom. So y'all should have that now showing up in the chat. Should be just a link to the TickUps chat. So if you're, it's not right. So weird. Okay. It's a little technical difficulty here because, you know, it wouldn't be a live stream if something fun didn't happen. Let's see. TickUps. Try this one last time. Yeah, it's not working. Yeah, it's not working. Whatever. Okay, so I will. That's a bummer. The link is t.me t.me t.me/TickUps. So let's see if that works. If you copy that link and paste it into your phone, it'll take you to the TickUps link. I don't know why it's not letting me actually post the link. But if you guys have any questions at all or interested in being part of the next mentorship that I do, feel free to hit me in that chat and I'll get back to you as soon as possible. So, or find me on social media. So I think the best bet is finding me on social media at Brinks Trades, right? My YouTube channel or my Instagram account. You guys can find me there. So if you guys appreciate you guys taking the time out to watch me, and hopefully you got something good for this week. Happy trading, and yeah, catch you next week.